Hey guys, today we're going to talk about should we be refinancing your mortgage, how to calculate the math to figure out if it even made sense, and we're going to do all that in under 3 minutes today. So excited to dive into this with you, but if this is your first time joining us, welcome. My name is Michael Foley. I'm a financial planner for healthcare workers with student loans, and so let's dive in. So when we're looking, rates might be dropping here, and if they are, should we be considering a refinance, and what are the things that we need to be thinking about? So to really simplify it, we need two things. The first thing that we need is how much is it gonna cost to refinance your mortgage? A lot of people might not know that it even costs money to refinance, but usually the average cost is anywhere between 2 and 6% of the total cost of the loan that you're refinancing. So that's some hefty costs depending on how large the mortgage is. So that's every fee, origination fee, every point, maybe you're paying points down to try to reduce the rate even further. Every cost, you can usually get that from your lender to say, lay it out for me, and even if it's being blended into the loan, doesn't matter, what is the total cost, okay? So we need to know that number. And then the second number is we need to know how much is it gonna save you on a monthly basis moving forward. If we can have those two pieces of information, we can answer the question, right? Really, let's break down an actual scenario, okay? So let's say we have a $500,000 mortgage that we're wanting to refinance, and so let's take like an average, like the middle of the patch. So it's usually between 2 and 6%. So let's say it's 4% of the cost to refinance. So it's gonna cost you 20 grand. Let's say, depending on how much they're dropping your interest rate, maybe that's actually gonna bring your mortgage payment down by, let's say, $400 a month, okay? It's costing us $20,000. It's saving us $400 a month. So then we can figure out, okay, how many $400 per month do we have to go before we actually break even at the total cost of the $20,000, right? So the other thing is that if we are really thinking about what is that time frame and we're going to be staying in the house, if this is 50-month break even, that's a 4-year time frame. So if you're thinking about selling the house in 3 years, it's not going to make sense, right? So that really is something that we got to be thinking of. What is that break even, and does that really make sense? And we look at industry average. Usually people for their first house are anywhere between 7 to 10 years in living in that house. And so if you're planning to rent the house out, it may make sense to have a little bit longer break even. But if we're really getting into that 7 to 10, 15 years, it's probably not going to make sense to refinance. You're probably better off just sticking with your current mortgage. So thanks so much for joining. Also, we'd be more than happy to sit down with you and see how we can help you run that number to try to actually do the math for you and see if that makes sense in your situation. So feel free to reach out to our team. We'd love to come alongside you.